If you own a business and you're making money, there's a 90% chance you are currently overpaying the IRS. And it's not because you missed a deduction. It's because you are in the wrong bucket. I'm Trevor Dinsmore, founder of TJD Accounting and Tax. Every single week, I talk to business owners who tell me, Trevor, I started an LLC to save taxes, and I have to give them the bad news. An LLC by itself does not save you a penny in taxes. In fact, it often costs you more. In 2026, with the Social Security wage base higher than ever and new compliance rules in effect, the choice between staying an LLC or electing an S-Corp status is the most important financial decision you will make this year. In this video, I'm going to break down the math. I will show you exactly how an S-Corp saves thousands in hidden taxes. I will tell you the new revenue number you need to hit before it makes sense. Hint, the old advice of 40,000 is wrong. And I will warn you about the one state tax trap that can ruin the whole strategy. Let's dive in. First, we have to clear up the confusion. An LLC is a legal designation. It stands for Limited Liability Company. It protects your personal house and car if your business gets sued. That is a job for lawyers. An S-Corp is a tax election. It's not a separate business structure. It is a badge you wear that tells the IRS, tax me differently. You can be an LLC that is taxed as an S-Corp. That is the sweet spot for most of my clients. So, why would you want to be taxed as an S-Corp? To avoid the self-employment tax trap. Here's the reality of the default LLC. If you are a single member LLC, the IRS treats you as a sole proprietor. If you profit $100,000, the IRS says all $100,000 is your salary. That means you pay income tax on $100,000 plus you pay 15.3% self-employment tax on the entire $100,000. That 15.3% is for Social Security and Medicare. That one tax alone is $15,300 gone. This is where the S-Corp changes the game. When you elect S-Corp status, you become an employee of your own company. This allows you to split your profit into two buckets. Bucket 1, W-2 salary. You pay yourself a reasonable salary for the work you do. On this bucket, you pay that expense 15.3% tax. Bucket 2, distribution, profit. This is the money left over. You take this out as a distribution, and here's the magic. You don't pay 15.3% self-employment tax on distribution. You only pay regular income tax. Let's do the math on the same $100,000 profit. Instead of taking all $100,000 as salary, let's say a reasonable salary for your role is $60,000. You pay the 15.3% tax on $60,000. The remaining $40,000 you take as a distribution. It is free from self-employment tax. 15% of $40,000 is $6,000. You just saved $6,000 in taxes just by filing a few pieces of paper. That money you can reinvest, put into solo 401k, or take home to your family. But before you rush to file Form 2553, you need to know the cost. An S-Corp is not free. To run one correctly in 2026, you have new costs. 1, you have payroll costs. You must run payroll that costs money, software, plus fees. 2, tax prep fee. An S-Corp requires a separate tax return, Form 1120S. This is more expensive than a regular return. 3, state taxes. Some states charge a fee just to be an S-Corp. Here in Illinois, we have the replacement tax. California has the $800 franchise fee. New York has the fixed dollar minimum. Because accounting and payroll costs have gone up, the break-even point has moved. Years ago, people said, do it if you make $40,000. That is bad advice today. In 2026, my rule of thumb is this. Do not switch to an S-Corp unless your net profit after expenses is at least $80,000 to $100,000. Below $80,000, the cost of payroll and filing might eat up your tax savings. It's just not worth the headache. But once you cross $100,000, the savings skyrocket. At $200,000 profit, you are literally lighting money on fire if you stay a regular LLC. One final warning, the IRS is not stupid. They know everyone wants to lower their salary to save taxes. You cannot make $200,000 and pay yourself a salary of $10,000. This is a red flag. That is an audit waiting to happen. In 2026, the IRS is using data analytics flag salaries that look too low for your industry. If you are a doctor or a consultant or a marketing agency owner, your salary needs to match what you would pay someone else to do your job. We help our clients run compensation reports to find that perfect sweet spot, low enough to save taxes, but high enough to satisfy the IRS. Here's the bottom line. If your business is growing and you expect to net $100,000 this year, we need to talk. The deadline to elect S-Corp status for 2026 is March 15th. If you miss this, you might be stuck as a regular LLC for another year, paying that extra 15% tax. Don't let that happen. If you know you are ready and you want us to run the numbers for you, book a discovery call using the link below. We will look at your profit, calculate your projected savings, and tell you honestly if it's worth it. I'm Trevor Densmore. Stop tipping the IRS. I'll see you in the next video.